The psychology of markets is fascinating because whatever a market anticipates might happen is in the end what will happen, what will become reality. It's the idea of the self-fulfilling prophecy effect. If enough people think that an asset is already very depressed, that it's very cheap, then very few people are going to sell that asset for the low price, and a lot of people will buy the asset. Thus the price will recover. If enough people think that an asset is already expensive, then the demand will dry up and the price might go down. So whatever the market anticipates is likely going to happen is in the end what we see reflected in the prices going forward. Now in crypto, we've got a lot of those theories that might end up becoming self-fulfilling prophecies. There's the 4-year cycle theory in Bitcoin, that there's 3 years of market expansion, followed by a crash and then again an expansion, always driven by the Bitcoin halving that happens every 4 years. Then there's another theory that's almost equally as popular, that a bull market tends to become more and more heated over time, and that people tend to take on more and more risk as a bull market progresses. At the beginning, people just buy Bitcoin. When Bitcoin has rallied, people swap over to Ethereum. Once Ethereum has rallied, then people swap over to the altcoins. It seems like this is a consistent pattern. The question is always, how can we time this right? What's the best timing to buy the altcoins? In this video, we are following the data. We are having a look at the market structure at different points towards the cycle to then estimate at what point in time will the altcoins actually do better than the rest. Because clearly, currently the attention is not on the altcoins. It all started out with the treasury company story. So first it was Michael Saylor with MicroStrategy that accumulated a lot of BTC and did so faster and faster just recently. But then we also have now the accumulation story for Ethereum. There are strategic Ethereum reserves by various companies. The number of ETH that's held by those companies is going up. There seems to be even some kind of race of who's going to buy Ethereum the fastest. Because have a look at those companies that are buying the Ethereum. Tom Lee's Bitmine is constantly stacking, but SharpLink is as well. It seems like it's a race for number one. And so there's a real case to be made that maybe we already see the first kind of rotation as the bull market progresses. We might already see the rotation from Bitcoin to Ethereum. Because there's not just the treasury company story now, there's also the F story. And in the last month, we actually saw outflows out of the Bitcoin ETF. Usually Wall Street stacks Bitcoin, so there are net purchases from the Bitcoin ETF. But in the last month, this was not the case. Have a look at the number of Bitcoin that's held by the ETFs. In general, this is an upward trend. But again, the last month, we tended to see very little interest. This is different to Ethereum. Ethereum experienced a supply absorption in the last month of 8.3% when we annualize this. And here's the number of ETH that's held by the ETF. So it seems like the growth for Ethereum demand is not slowing down, but it might be slowing down for Bitcoin. And that then led to the massive crash in the Bitcoin Ethereum relative valuation. Bitcoin underperformed Ethereum since the middle of April of this year by more than 50%. But this Bitcoin to Ethereum market cap chart also shows us some kind of a trading range over the cycle. It tells us a story that maybe the rotation has not yet finished, that the Ethereum demand might continue to outpace the Bitcoin demand, and that Ethereum could still be a good bet. Now, many people actually confuse the positive performance in the altcoins with demand for the altcoins. Most altcoins did not go up because retail suddenly starts buying those small little alts again. The altcoins went up because of their coupling in liquidity pools with Ethereum. So the pricing of altcoins is not determined in US dollars for the most part. It's determined by the ratio to wrapped Ethereum. So for example, here, mock coin, the mock price is not in US dollars. It's just how many wrapped Ethereum are in the liquidity pool versus how many mock are in a liquidity pool. If people buy mock, then they put in their wrapped Ethereum and they pull out their mock. The ratio between the two assets is really what determines the price. So when Ethereum goes up by 10% in US dollars, automatically, without a single transaction, mock coin also goes up by 10% in US dollars. So a lot of this positive return is just Ethereum going up. It's not demand directly for the altcoins. And so knowing this gives us a bit of an idea of when altcoin season actually happens. It gives us an idea how to isolate the altcoin performance from the Ethereum performance. How much of an altcoin price appreciation is due to the demand for the altcoin versus due to the demand for Ethereum? Because most people just look at it this way. They just look at the altcoin market cap and they say the altcoins are going up and so this is altcoin season. But again, this is not how it works. Part of the altcoin upwards pressure on the price is due to Ethereum getting bought, and the other part is potentially getting some altcoins getting bought as well. But really, we have to distinguish between the two. And that's why we've got this chart here. And this is, I believe, very fascinating. This now shows us the ratio of the Ethereum market cap to the altcoin market cap. So now we look at the exact swapping activity. And who would have thought we do have somewhat of a trading range here? Sometimes people want to get into the altcoins. Sometimes people just want to hold Ethereum. So when this is high, then Ethereum is expensive relative to the altcoins. When this is low, then people have swapped from Ethereum into the alts. And so this oscillates quite consistently. And currently, Ethereum is rather expensive. And so now the question is, will Ethereum come down from here or will the altcoins go up from here? It's not that straightforward to answer, because this time the demand for Bitcoin and Ethereum is very different to how it had been in prior cycles. In prior cycles, it was mainly retail that bought Bitcoin and Ethereum and made the gains, and then rolled over those gains directly on the centralized exchanges into the altcoins. This time, that's not necessarily the case, because this time, whoever makes money with Bitcoin and Ethereum might not have as quick of an access to buying the altcoins. For example, when it's bought via stocks in the treasury companies, or directly via the ETFs. There is no ETF for Mantra or for Radium or for Polygon or for PIF. I think we should now distinguish between two classes in crypto. We've got on the one hand Bitcoin and Ethereum that has all of its demand, or a lot of it at least, through the ETFs and through the treasury companies, and there is all the rest. And so we do see currently a concentration process, as in capital concentrates towards Bitcoin and Ethereum. And so let's just have a look at this dominance, right? We don't look at Bitcoin dominance. We don't look at Ethereum dominance. We just look at the Bitcoin plus Ethereum market cap relative to all of crypto. And then we get this chart here. So when there's a lot of capital in Bitcoin plus Ethereum, this is very high. So that's when the market wants to rather have the safe assets, the leaders in the space. And when this is rather low, that's when the market is speculating with the altcoins and doesn't want to know much about Bitcoin and Ethereum. And who would have thought in the last 2 to 3 years, we have seen Bitcoin plus Ethereum outperform the rest of the market. And in the past, we had to be at roughly 80% of Bitcoin plus Ethereum dominance to get a real altcoin season, like over here or over here. What we see here indicated by this red area, that's the real altcoin rotation. So this is when people moved away from Bitcoin plus Ethereum and they actually moved into the alts. And so when history is any indication, there's probably some more room to grow for Bitcoin plus Ethereum. Now, when does this altcoin season here happen? Let's have a look at the Bitcoin price at the same time. We had a massive altcoin rotation at the end of the 2017 run. So that's when Bitcoin went all the way from $500 to $20,000. And then we had a second rotation again at the end of a bull run, when Bitcoin moved from 3.5K all the way to 60K. So it seems like we need to have a prolonged bull market. We need to have risen by 10 or 20x in order to justify getting that risk on again. Altcoin season is driven by the retail investor. It's not driven by Wall Street. And so when the prices have already gone up quite a lot, when everybody talks about crypto, when it's all in the media, that's when the retail investor comes in as well. And so yes, we are in a prolonged bull market, a bull market that started at the end of 2022. We have come up since then by almost 7x, so a 600% increase. But we aren't yet at the heated levels that we've seen in the past for altcoin season to happen. And so that's probably the plan going forward. We will see Bitcoin and Ethereum rise further, and only once people unfamiliar with the space want to enter as well, that's when things become interesting for the next altcoin season. I don't think we are there just yet. The vertical line here, by the way, is when the Ethereum rotation started to happen. So this is when ETH started outperforming Bitcoin. So Bitcoin plus Ethereum still gained market share relative to the altcoins. Now I'm trying to be different on this channel compared to most other channels. Most other channels just say buy asset A or buy asset B and you will make a 10 or 100x return. But most of the time, most people just get wrecked in the process because sometimes there's a conflict of interest, right? The influencer might already own the token, or the influencer might have even gotten paid by the project to talk about the token. But I try to do something different here. I'm trying to show that I'm not just talking, but I'm actually doing. So I opened a capital pool for the members of this community 1.5 months ago. And so far, this capital pool has an annualized performance of 79%. It started on July 10th and so far had only had a maximum drawdown of 2.3%. So that's what I'm actually most proud of, as in the gains are very, very constant, yet still very high. And the way to achieve those gains is by buying things like this. So this is a relative valuation chart. This is another relative valuation chart. Here is one more. And we're betting on one asset to do worse than the other. So this, for example, is WorldCoin. It's got an expanding token supply. Thus, it tends to underperform Ethereum. This is Ethereum relative to WorldCoin. Over here, we've got the token supply of DYDX. This is a decentralized perpetual futures exchange, also a growing supply. And then we see how Ethereum outperforms DYDX. Or over here, we've got the balancer token. I've talked about this for a long, long time on this channel. And here is Ethereum relative to balancer. So this is how we can achieve those very high returns by having very little volatility, very few drawdowns, because we cancel out the overall macro development. Yes, it's possible with crypto to double the capital just in a few months, but then also the risk is very different compared to what we are doing here. Because there are times where everything is going up, but there are also times where everything crashes, right? This is a long-term chart of Cardano. This was a crash of 97%. Then we saw a new all-time high, a subsequent crash of 92%. And that's always the problem with trying to chase the next altcoin. There's no protection against the macro environment turning around. But let's have a look again at those relative valuation charts. This again is Ethereum relative to balancer. And at the bottom, we now see the Bitcoin price. So Bitcoin went through an entire bear market, a 75% correction. But at the same time, this relative valuation trade still made money. Let's actually have a look at this on a logarithmic chart. Then we can see the percent changes a bit better. Just have a look at this, right? This is how we make constant gains without these massive drops. And I truly believe that this is the way to really make money in crypto. It's with relative valuation trades. It's just with figuring out, is A better than B or is B better than A? And cancel out the overall macro environment. We don't necessarily want to have too much exposure to the macro, because once we have too much volatility with our portfolio, then it's much harder to bet more capital. So think about this the other way around. Let's say we go for those moonshot bets, right? Let's say we want to make a 10 or 100x return. And let's say every now and then we're actually successful at doing so. The problem is very often those bets do not work out. Thus, we can't bet 10,000, 100,000 or even more dollars on such a bet. We have to do small bets and hope that among many of those bets, maybe one of them makes a multiple X returns. But that means we can't really invest a lot of capital. The lower our volatility is on an asset, the more we can potentially deploy, because then, at least mathematically, it's less risky. The less risk we have, the more we can deploy. The more risk we have, the more the risk of ruin, the more the risk of going down by 80 or 90%, the less we can invest. It's a bit like doing those very small bets, hoping for the best outcome, versus actual serious investing where we get nice compounding growth. And so yeah, there is this capital pool. The members get exactly this return right now. I don't just talk the talk, I'm actually showing the world openly how things perform in the open market. And I wonder if the other YouTubers that you're following are willing to do the same. And if they are, is the performance going to look like this? I followed this strategy of relative valuation bets for 4 years now, and because of that I got much more return compared to just buying and holding Bitcoin. Had I dollar cost averaged into Bitcoin, I would have gotten the return indicated here by this gray line. But because I entered relative valuation shorts, I got the return here in black. And so the community is following the strategy as well and sharing their gains over here in this chat. I'm of course sharing my trades as well. So this is July 23rd when I opened a short position on WorldCoin. So that's short WorldCoin and long Ethereum, and then a few days later I closed it with some nice gains. This is just one example. My target with this community is not just to show how great the strategy works and how relative valuation bets is really where the alpha is. My target is not just to make money with that trading. My real target is to create a community where most members make money with the same approach as well. Of course, with the community capital pool, I also take a cut of 10% of the gains, but I think that's still comparatively fair because most other hedge funds, they take 20%, and at the same time they also charge 2% of the entire principal every year. There's no such charge that I'm doing here for the members. The capital pool has been closed though, so the maximum deposit limit has been reached. There will be a new pool opening at the beginning of next year, but still you can manually copy trade everything that I do. I share my trades in real time. And while everybody can share testimonials on websites, it can sound like it's cherry picked, right? Maybe the majority of people don't really make money with this. But that's why just today I asked the community members, has Premium helped you improve as an investor? And 87% said yes. Yes, I myself also voted with yes here, so make it maybe 86%. So of course not everybody is happy. There are people that are still not able to make money. But I think 87% is not too bad of a ratio. If you're willing to learn, if you're willing to follow the content, if you're willing to also implement the risk management strategies, then there's a very good chance that you will be among those 87% as well. I was thinking about this. How can I make this actually as easy as possible for new people to enter here? And what I thought is maybe I try to find an approach to make this with as little risk as possible. As in, I thought maybe there's simply just a bit of content that you have to watch first. Then I share my favorite trade that I have a lot of conviction in. And then after 1 month, if you don't make money with that trade, then I will just refund you the entire membership fee. So really, you don't have any risk with that membership fee. So here's what you have to do. You have to watch 2 videos only. It's how to bet on relative valuations by using perpetual futures on hyperliquid, and then how to do risk management with relative valuation bets. Those 2 videos are just 1 hour in total. That's all the content you have to follow. Once you've done this, you join the community. So that's different channels on Telegram. And once you're in Telegram, then I will send you my favorite trade. Trades that look very similar to this and this and this, for the same reason, because of token inflation. That's why those tokens tend to do worse than Bitcoin, Ethereum, and Solana over time. And if you're not making money on a chart like this after 1 month of joining, then of course I'm willing to just refund everything. And with everything, I mean of course the membership fee, which is currently $125 per month. So this is now for the manual copy trading. This is now for learning how to actually make those bets. But if you're interested to be among the first people to join the next capital pool, which will launch at the beginning of 2026, that announcement will be made to the annual members. There will be an additional cost. It will not just be the annual membership, but the annual members will get early access. So feel free to change from monthly to annual if you don't have that much time, but you do have more capital. So that's more of a hands-off approach. If you have at least $10,000, better even more to invest in crypto. Then the annual membership might make sense long term. A link to Premium will pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in Premium. Cheers!